Dan Morehead, good to get you finally back on Real Vision. And it's the first time we've sat down to chat for a long time. And you reached out recently because of your macro views. And I thought, who better to talk through macro and then where we potentially could go with this than you. I'd love for you just to quickly let people know kind of why you're involved in macro, because people now know you from a different space than the world that I knew you from originally. So if you give a bit of background about yourself, I think that'll frame everything nicely.
I started out as a fixed income mortgage trader at Goldman in the 80s, actually right before the 87 crash. So I've seen one of these cycles before. And then you and I met when when I was at Tiger Management. We were trading global macro, big disruptions around the world, trying to see things from a very global macroeconomic standpoint. And in 2011, I got excited about Bitcoin and had been full on blockchain since then. And up until recently, global macro really had no impact on blockchain. And, the reality is the worlds are now all interdependent. And global macro, I think, is going to have a huge impact on blockchain. And in particular, the fiscal and monetary policies are going to impact cryptocurrencies. I
must admit, it was a genius move of you to do what you did. That was the best macro expression I've ever seen, which is basically to say, and we've seen lots of our friends go through the same cycle, but you were by a long way first, saying all of the macro opportunity set added together is less than this one opportunity set. So this is the macro view. And that was essentially what you did. And it was incredibly prescient of you to do that. I just thought, it was just an amazing thing to have done. And you kind of got in at the right time and understood it a long way before everybody else.
Thanks. Yeah, I've been fascinated by these disruptions that come along, Russian privatization or Argentine farmland or Tesla Motors. Every 3 or 4 years, something kind of little shiny object in the forest that I pick up and try and figure out and spend, a year or two investing in it. But I do think blockchain is literally orders of magnitude bigger than all of those trades. And I think it's the second half of my career. So, I'm really excited to stay focused on it.
So talk to me through, how are you perceiving the situation now? Let's dig into the macro, because there's a lot going on and a lot of people are confused kind of where we are now and some of the probabilities of how things play out. And then we can kind of dig in and chat about things as we go.
The first, main thought is I'm not an epidemiologist, so I'm going to leave that to others. But having studied 35 years of global economics, this thing is just bigger than anything since World War II. And I think even I'm trying to get my head around that, but I think a lot of economists and market participants are still kind of not yet appreciating how large this thing is. Here's just one quick thought experiment. Is the least bad way to combat the virus is for everybody on Earth to shelter in place for 2 weeks. And at the end of that 2 weeks, we test everyone, and those who are infected get medical treatment, and the rest of us go back to work. That is absolutely the least bad alternative. And even that, if you take 2 weeks divided by 52, that's 4% of global GDP. That is just such a huge number. And yeah, some of us can work remotely, like you and I are, adding a little bit to GDP here. But, for most people, most industries, it's very difficult to work remotely. So the least bad outcome is 4% to global GDP. And then the unfortunate reality is this virus is kind of ebbing and flowing around the world in a very asynchronous way. China, who led us into this crisis a few months ago, is actually starting to come out of it right at the same time. Countries like the U.S. and Canada and Europe are kind of right in essentially the nadir of it. And then there are other parts of the world that have yet to experience it, but unfortunately are likely to. So as this thing washes around the world at different times, it's essentially extending the amount of time the global supply chains are down.
Yeah, I mean, that's my big concern is the market wants to believe in the old world, which is it's an event like 9/11, you take the hit, there's a bit of a shock, and we return to normal. But I look at two factors within this. One is the rolling nature. Countries like Brazil have barely started in this cycle, while other countries are more advanced, like South Korea, Singapore, or even Italy. And the US has really kind of messed this up in terms of how that works. So I worry that this rolling cycle continues, as you do, much longer than people anticipate. So it's not a 3-month event that the market's kind of hoping for. I also think there is a lot more psychological damage that comes from this. Even when you reopen economies, the Prime Minister of Singapore made an amazing speech explaining that, listen, Singapore's not going to open its borders, probably not for a year, because how can it? And he said, look, we're going to have to take this hit, but nobody's going to be freely traveling. Nobody's going to be congregating in groups. Barring a miracle, this thing's around for a long period of time. So you don't get a one-off GDP hit. You end up with a drawn-out recession.
Well, I think you're spot on. It's unfortunately our central case is that this will be drawn out for many, many months. And there is a psychological impact to it. You know, if you think about all other recessions, they're created by a lack of either credit or income. And if the government provides those things, you can all get back to work and it's all fine. In this case, it's a psychological impact. This is all very distressing. And it'll be really hard to get people back to work. And you know, a lot of the economy's the consumption of services. And, you know, I was thinking about how tough the Fed's job is here, right? One problem is they're already so close to zero, like all other central banks when we came into this, that they really had little to do. But their last cut was 100 basis points. You know, I think that's impotent, right? Like, hey, honey, the Fed cut 100 basis points today. Let's go to the movies. Like, it doesn't have any impact. They could cut rates 1,000 basis points and I went and go to a movie theater, right? So I think that is going to make this last a lot longer than people think. China's trying to reopen, and there's a great photo of a movie theater absolutely empty, right? Like, you know, even if they're officially open for business, the psychological damage is going to take months, or you even suggested potentially years. And then your point about 9/11, we actually mentioned that in our investor letter. You know, there's already talk of this being a V-shaped recovery, and it's, you know, just going to be right back to business as usual. I think there's so many things that I have no idea what's going to happen. This is an incredibly uncertain time. One of the only things I really believe strongly is it's not going to be V-shaped. That the comparisons to 9/11 are really starkly different. In that case, every aircraft was grounded for 3 days, and then 3 days later, every aircraft was in the air, and commerce could restart. This is just, you know, the effect has been slowly percolating. The CDC knew that this was a problem in China in late 2019. So this already, we're going into our 4th month of this. So, you know, we're just starting to attack it. It's going to take many, many months to really bring this under control.
Yeah, I mean, I've been looking at China because if China started this first, then we should be able to understand what lies ahead for us. It's worked pretty well to use them as a roadmap. Now, obviously, they lied about their numbers and et cetera. That's irrelevant for now. What's interesting is they've kind of forced people back to work, okay? And we've seen factories start up again. We've seen pollution go back up. Problem is one, who are they going to sell those goods to? So you're creating, I think, a default cycle. Not only in China, but around the world. And I think there's a solvency crisis that we have no parallel for that is coming. Additionally, if I look at simple stuff like, really fascinating, TomTom produces traffic data for any city in the world. You look at the traffic data for Beijing, it's almost at normal during the weekdays as people go to work. Weekends, down 80%. People aren't going anywhere. I just spoke to somebody who was in Beijing, and they're talking about restaurants. So they said, yeah, restaurants are open. Problem is, there's only 10 tables, and you're only allowed 3 people on a table, and there has to be, you know, social distancing. So in a restaurant business, which is a low margin business, you're compounding negative returns. And it's that destruction of cash flow that really worries me in this, that we end up with a default cycle. And as you rightly said, the governments have started to try and inject money to repair balance sheets, i.e. at household level. The problem is they're not offsetting people's wages. So you're basically just giving them subsistence living. That doesn't drive consumption. It's not stimulus. it's just trying to paper over some of the cracks.
I agree. I think it's unfortunately true that in past recessions, fiscal or monetary stimulus always could cure the problem. I really think they have very, very little efficacy here, unfortunately, because even if you replace the lost income, nobody wants to go to a restaurant or nobody wants to go to a movie theater. And I do think China and other countries like Korea and Taiwan are really good case studies of how to combat the virus. I think it's very important to note that China basically walled off 60 million citizens in Wuhan on January 23rd when they had only 17 deaths. And most other countries have taken less strict measures way later in the cycle. And so I think we'll end up with a larger economic hit than China is going to endure.
So what's your view of the US situation? Because that's the one that seems quite concerning, and I think it's the one which will drive potentially monetary policy and a whole bunch of other stuff, fiscal stimulus. What's your view of the US situation and how that's going to evolve?
Yeah, I would say I don't have any deeper insights than the experts on this, so I'm not the guy to say it. But from an economic standpoint, it seems like this is going to be a really big hit. The call now from Goldman Sachs is a 34% annual rate fall in GDP. That's just a number you and I have obviously never seen. Will leave GDP 6.2% lower than it was. Honestly, I think that's like highly likely, if not more. Again, if you go back to if we all just didn't work for 2 weeks and then we all went right back to work doing 100% of what we used to, that's a 4% hit to trend GDP. And if trend was 2%, that's -2. But that, I think we have to keep in mind that the U.S. is not even really into the worst part of this problem. And so it's going to be, many, many months until it's worked out.
So what is the role you think that the government and central banks are going to play in this on a global level? What are they going to do? Because, that's the next phase, is looking forwards and is trying to understand what they do and whether they can address any of this and how excessive monetary and fiscal policy becomes.
Well, yeah, they certainly can be helpful, and I'm encouraged that they have been engaged, very quickly. But, this is a totally different thing we're fighting. We're fighting an invisible virus rather than a lack of income or a lack of credit. And so the coordination that we're used to, where the finance minister and the central bank governor of all the countries who are used to working together and used to using monetary and fiscal policy tools to combat these things that were very well studied, very, very well known, what to do with a lack of income or a lack of credit. That's not the issue here. The issue is a medical one, a science one. And so we are at war. I think it's a good analog. And in physical wars, you have the general give the press briefings and talk about the issues in the war. In this, it should be the scientists that are telling us, what the issues are and what our trade-offs are. Scientists and economists, because it obviously is a trade-off with the economy. But those groups are not really used to coordinating. In the United States, a good example, we have 3 or 4 different health organizations that each have some remit here, and coordinating between them is difficult. And so they're not used to coordinating with the Fed and with the with the Treasury, and so it's a very unprecedented policy challenge. And unfortunately, I think the fiscal and monetary stimulus are going to have less impact than people would hope. In the last crisis, the U.S. was able to cut 437 basis points. Here, we only had 150 basis points of ammo left. And then globally, the world was able to cut 298 basis points in the 2008-2009 recession. And here, we're only going to get 55 basis points on average of global rate cuts. So we're seeing 1/5 of the monetary stimulus we had in the last recession. This is a much bigger recession. So, if we wanted monetary policy to be effective, we would want much more of it. And so unfortunately, the one policy lever, monetary policy, is really tapped out. And then the fiscal policy, we've seen a 10% of GDP stimulus signed days before a new stimulus plan's been talked about. And so, these are just numbers that are literally off the charts. I think it's almost certain that the United States is going to exit this crisis with more debt than after the battle against the Great Depression of World War II. And that's just an amazing place to be. We entered it with a very large structural fiscal deficit. The U.S. was spending 31% more than it was taking in, even with record employment, record stock prices, record real estate prices. So essentially just creating a ton of money increases the quantity of money. That's the whole objective of quantitative easing, is to increase the quantity of paper money. And it's already having its intended effects. A very clear policy goal is to raise the level of stock prices relative to where they would have been otherwise. And that is obviously working, but it's like hydrostatic pressure. It's going to raise the level of all assets that are not quantitatively easable. So it's going to raise the level of real estate. It's going to raise the level of gold and cryptocurrencies and, dozens of other things.
And so using your macro viewpoint, if you weren't in the crypto world, what would you be doing now? How do you see this evolving in market terms?
Yeah, that's a great question. And since I kind of hung up my global macro cleats, 7 years ago, I really don't want to get over my skis here. The only thing I would say is, relative to what everyone else is talking about, I think it's going to be a much bigger and longer recession than other people are talking about. So all things being equal, I think it's probably negative for equities. And then I think in the end, you're going to see a divergence. There's always this knee-jerk reaction in a crisis. Things like the dollar and treasuries always go up, flight to safety, potentially repatriation of assets, developed countries selling emerging market assets to bring them back to their country. So the trade-weighted dollar's up about 5%, I think. I would have to say, I think in the long run, all of the essentially the easing of the quantity of money in countries like the United States relative to some of the other countries on earth is probably negative for the dollar. But again, I haven't looked at the global macro markets very closely for a long time. So that's just a hunch, not something I put some money on.
Yeah, I'm kind of more fearful because if we go to a solvency event, the largest financial position on earth is the $13 trillion short position held by foreign corporations in US dollars. So I worry that as global cash flow goes negative, the chance of servicing that debt becomes almost zero. So you have to go through a default cycle in generally emerging markets. And that makes me fear that we get a much stronger dollar. And my view for a long time has been this cycle breaks not from the weak dollar, but from the strong dollar, and eventually forces the other central banks who've been talking about this already, that the dollar standard is not something that is manageable any longer. It's kind of broken. That Triffin's dilemma is at play, and as a reserve currency, there's not enough dollars abroad to deal with this. That's what I'm fearing, and I pick up a lot from the central banks. Mark Carney was the first one to make it clear that he'd love to move the Bank of England away from this dollar standard, and the first step is towards a digital currency world. I don't know what your view is. Okay, we know this is screwed. My view is this is probably going to be the biggest insolvency event of all history. That's going to take a huge strain on the financial system and possibly force the dollar up. I don't know what your views on that is, and then where does this go?
Yeah, so I love that U.S. Treasury Secretary Connolly in the 70s said, the dollar might be our currency, but it's your problem to Europe. And it's a fact of the world that the dollar is the reserve currency right now. That's changed every 80 or 100 years over the last 6 centuries. It used to be the Portuguese escudo and the Spanish real, and now it's the then the pound, now the dollar. There really isn't another candidate in the fiat currency world. I do think in the long run, and this is decades, cryptocurrencies will become reserve currencies. So whether it's Bitcoin or Ethereum, Ripple, whatever, ultimately some of those will be reserve currencies. But governments are very slow to change. And so, I think that's a 10 to 20 year, very slow progression. But that would be the answer. I actually thought the original construction of the Libra project that Facebook created was genius, is to use a basket of 4 currencies. Sure. So you're creating kind of like a virtual SDR, right? The SDR is a great concept, but you couldn't actually transact in it. So creating a basket of currency, whether Libra does it or somebody else does it, somebody will ultimately do it. That could easily become a reserve currency. So it would be essentially
I love the fact that the dollar was part of the basket. So therefore, the basket itself should only move up and down with, let's say, global money supply. So it becomes a true stable coin in our terms of the different world. But that's an extraordinarily powerful thing. I think most people didn't understand what Libra was until it came out. I looked at it, I was like, oh my God, this is game changing.
I agree. I thought it was beautifully designed. I thought they did an amazing job designing it. And, there was so much fuss about the rollout and, the kind of all the lightning rod, attention to Facebook, the brand. But the product they designed was genius. And, hopefully they'll get theirs out. But if they don't, someone will do something very, very similar to it. And that's essentially what everyone on Earth wants, is a currency that's kind of tied to, if they're a European, it's kind of tied to the euro. If they're Japanese, it's kind of tied to the Japanese yen. If they're in the United Kingdom, it's kind of tied to the pound. U.S. kind of tied to that. But it's not too volatile relative to their own currency. And then if they're in some other country or region, it's not very volatile. So it's I think it's the best of both worlds. It's not pegged to one single currency, but it's not crazy volatility like Bitcoin or ETH would be. And so ultimately someone's going to do that. And then central banks will start using it. Again, it's going to take decades. But central banks will start using that. It's the only way I see to get away from the dollar hegemony that, people are always griping about.
I'm a little more bullish on the time horizon because I think this event is bigger than people can understand. And if there is an event that breaks this system, or at least forces people to adopt different things than they would have adopted at this stage, I think this would be it. And again, hearing Benoit Cœuré and the ECB and Mark Carney and a bunch of others talking about digital currencies, it kind of feels like they want to move towards this basket idea. Now, whether it's done with Libra, without Libra, or something, I think they've all spoken about how the dollar standard just doesn't work for them anymore. So I'm not so sure that might be the surprise outcome of this, which will massively help all the cryptocurrency world and everything else, because then the world is digital off-ramps and digital on-ramps.
Yeah, you're right. And I think one of the important things to do in this distressing time is think about the silver linings and the things that are positive about this massive disruption. And, like you and I working from home remotely might be part of it. And the whole world might change how they actually do business. So there's a lot of good things that could come of it. And you're right, really focusing on our monetary system, we might end up with blockchain being accelerated by it. I've seen great examples. We're invested in a company that helps people move money using physical, fiat money, bills and coins, converting it into Bitcoin and then being able to send it to their family wherever they live, either domestically or often in a remittance payment. And they're seeing record volumes, right? Because the fiat systems are kind of grinding to a halt, where you can still go to Safeway, pump $400 in the machine and have it pop out the other end. And so I think you're going to see some use cases where blockchain really kind of comes of its own in this crisis.
And so how are you seeing the space evolve? And things must be accelerating. I've always thought of it as it's like a hive mind of people developing an entirely new architecture. It's not just a financial architecture, it's an ownership architecture, it's a trust architecture. It's a number of things. And it feels like there's a hive mind of some of the smartest people I know are all focused on it. It's a huge group of people. What are you seeing that's kind of surfacing now out of this that's getting your interest?
Yeah, so the way I'd say it is in our 7 years of investing, we've seen a bunch of different eras. And the first year was all about just exchanges and custodians and really basic, ways to buy Bitcoin and then ultimately, Ripple and ETH and other things and store it. And so that was kind of our first year or two's investments. And then the next level is using cryptocurrency, and in most cases it was Bitcoin originally, to do some kind of cross-border money movement thing. And so we're invested in probably 12 or 15 companies around the world that help people move money across borders. And that's the thing that's really coming into its own right now. It's really been effective. If you think about it, the average cost of remittance right now for the hundreds of millions of people that migrate to earn money for their families is 9%. And you and I are in the financial markets, 900 basis points, whatever, it's just a number. But that's a month's wages, right? The migrant spends an entire month working for their remittance company, and their family only gets 11 months' wages. So the companies that are doing it with blockchain essentially are kind of the interregnum solution. Like ultimately people will just have blockchain on their phone and they won't need a company in the middle. But for the next 10 or 15 years, they're going to use these companies that charge, say, 2 or 3%. And they're seeing very, very strong growth. A great example of that would be 5% of U.S. to Mexico remittances going over Bitcoin right now. Wow. That's pretty wild, right? Like, it's a real use case that's helping humans and saving them money, getting more money back to their family. So that's what's really happening right now. And then the companies we're funding are kind of the next level of that. They're doing non-financial use cases. They're doing scaling solutions. The two biggest blockchains, Bitcoin and ETH, can only do 7 or 10 transactions per second. In order to compete with credit cards, we have to do 15,000 transactions per second. And if we want all the promise of micro labor, micro payments, we have to do orders of magnitude more than that. So we're investing in a lot of projects that help scalability. And then, as you and I know, there's a lot of plumbing to trading, order routing, order management type systems. So some of our most recent investments are in companies like Amber and TAXONOMY that help traders trade these things. And since we've essentially been the first at doing all these different things, we've had to prototype everything ourselves. And so we had to build all our own order routing and stuff. It's really hard. There's hundreds of exchanges that trade cryptocurrencies. And they're in all these different regulatory environments where it's really hard to move money around. And, they have all kinds of, there's thousands of tokens you could possibly trade. So it's a very complicated business. And, there's huge need for companies to help traders do that. And, there's journalists in the space, like The Block, that we're invested in. So there's just a whole lot of different ways. We're essentially creating a new financial system built on blockchain. So you need kind of one of everything you have in the existing system.
And how about custody? Because custody is one of the things that worries me in a solvency crisis, as you and I have gone through many times, is who owns all the shit in the end is one of the hardest questions to solve. How is the space working on this issue? Because, trusted ownership is one of the great things about blockchain. Who's doing that for the securities industry and all of the kind of assets that we all own in this?
In crypto, you're essentially custodying a password, right? You're really just trying to keep custody of the private key that can move the cryptocurrency itself. And the custodians in the industry, like Fidelity or Coinbase or Bakkt or BitGo, the hugely important thing about them is they employ no leverage. In the fiat system, you have, Lehman Brothers or whomever that are employing, 40-to-1 leverage across their balance sheet. So when something bad happens, problems that have nothing to do with the assets they're trying to custody essentially just wipe through everything on their balance sheet. And so I think the hugely different scenario here is blockchain custodians aren't levered, so there's no kind of systemic risk. And then they're normally essentially isolated from the financial markets. And there was a time when the biggest custodian in the space, which at Mt. Gox, which at the time had 85% of the market cap, they went under essentially without a ripple. The price of Bitcoin was up a week later. There's no federal bailout of Mt. Gox. So it's because they're unlevered and not backstopped by the government that essentially keeps them safer.
And what about the transition of the existing securities onto blockchain? What are the DTCC and people like that doing? I don't know what T0 are doing. How does that evolve? Because we're going to have a need for that because we can't have another Lehman event. And in a big solvency event that's potentially going on now, we're going to run into problems again. It feels like it's going to be the time and the place for blockchain to start doing that part of the custody.
It is. And one of the lines that I love using about blockchain is that when the technology is massively disruptive, they call it a category killer. Blockchain's a serial killer. It's going to go through dozens of different industries, including securities transactions and settlement. But the hugely important part of that tagline is it's going to do it serially. It's not going to do everything overnight. And we go through these manic waves in blockchain where, in 2013 or 2017, everyone's thinking, oh, blockchain is going to change the world overnight. And then we go in these, depressive waves where, oh, it's a failure, it didn't do anything. And the reality is somewhere in between. And It's going to do different industries at different times. I have been of the belief for a long time that the Wall Street bit of blockchain is definitely going to happen, but it's like a decade from now. And the reason is it's just so complicated, and it actually works pretty well. Like you and I have been in Wall Street for a long time. You can kind of bitch and moan about DCCC or whatever, but they process 100 million transactions a day with an incredibly low fail rate at incredibly low prices. Like all these, TD Ameritrades are going to free trading, right? Like what's the problem with free and T+2? It's just not that big. It's not broken. Whereas like if you're a migrant and you spend the entire month of January working for your remittance company, that's broken. So I think it will transition to a blockchain, but I think it's going to take a decade. There are some really exciting projects people are trying to do in the space, but as a firm, we've essentially passed on all the centralized Wall Street back office blockchain projects.
So there's several big ecosystems out there between Bitcoin, Ethereum, Ripple, EOS. How do you see the evolution of those, and how do they all play together? I'm incredibly concerned how tribal it all is right now, but I kind of know in a pragmatic world that there's a space for everybody. What's your view on all of that?
Yeah, it's a fascinating question. I'm sure there's going to be some great movies made about this someday. I would say there isn't a space for everybody, but there isn't a winner take all. And so that's a really frustrating kind of lukewarm water answer to your question, is that we have 2,000 tokens right now. I don't think we're going to have 2,000, and I don't think we're going to have just one. And there is a bit of a almost religious fervor in this space where, the disciples of one group will be, really, really excited about the other group. And so the punchline of this whole long diatribe is I think there's going to be a single digit number of very important blockchains. Each one's going to have its own use case. And it's already starting to shape up where you're seeing, Bitcoin not really change very much, but be really good at storing wealth. And so people like to call it digital gold, and I'm fine with that. You see Ethereum be really dynamic, and they're already going to Ethereum 2.0, and it's really changing, really ambitious. And then you have kind of the next generation of things like Polkadot that are coming, that are doing very ambitious things. And then Ripple's taken a kind of enterprise SaaS version of this and trying to work with all the banks and work with all the regulators to essentially replace SWIFT. They probably don't like it when I say it like that, but I think it's the easiest shorthand for what they're trying to do. So I think there's space for 8 or 10 of those use cases in the long run. We're not going to, but the main point is we're not going to have hundreds and hundreds of very similar quote altcoins.
And what is your view of tokenization? My particular view is that what we know of equities and fixed income won't exist within X period of time, whatever that period of time is, because tokenization can do a whole lot of things that currently equities can't do or fixed income can't do. You can isolate, I always use a great example, like a company like Exxon. Maybe you want to buy their upstream and I want to buy their new green energy business, and somebody else wants to have an investment in some of their assets, in their physical buildings. I mean, the idea of a corporation, which is to turn a company into a physical person by legal rights, I don't think has to exist in this world. I kind of think that there's a huge change coming on what can be tokenized. We've seen it with people. Obviously, sports stars will start to tokenize themselves. There's a number of things. I just think the securities markets that we know of old, if we go into the future 20 years, will not look anything like the securities markets that exist today and have existed for the last 100 years or so, 200 years.
Yeah, Raoul, I'd say that the things that don't work very well now, like, say, music royalty rights, wow, blockchain can add a ton. That's a great example of where, there's millions and millions of transactions happening every day. Each one's worth a fraction of a penny. There are often dozens of different people who own a piece of that work that's being streamed somewhere. And then you have a whole industry of these middlemen, accountants, agents, whatever, that are processing the payments. And, they call it Hollywood accounting for a reason. Like, the money always seems to get lost and the artist, ends up with a very small fraction of it. So the blockchain could do an amazing fix to those broken systems like that. So I think those are going to be, really, really important. Replacing existing IBM shares or whatever, I'm less bullish on. Again, going back, the DTCC does a great job. It's almost free. It takes only a day or two, so it's not really broken. I started my career as a CMO trader, so you're slicing up cash flows like you were talking about on upstream versus downstream. And there are some uses for that. There are some people that want that, but I'm not sure it's a big enough use case. And there was a huge push to do, securitized illiquid market assets like real estate a couple of years ago. And we invested in a couple of projects and looked at a ton of projects. And there was a lot of talk about, if you invest in, commercial real estate, it's really illiquid, and if you tokenize it, it'll be completely different. And some people did some projects and you realize, oops, maybe not everybody wants to buy a fraction of a building in South Carolina. So just because it's a token doesn't mean there's going to be 1,000 people lining up under a buttonwood tree somewhere to start trading it. And that would be my only caution, is that just because it's a token doesn't mean there's going to be 1,000 people that are excited about trading it.
No, I mean, there's no liquidity and it's very early days. I'm just conceptually interested in where this could lead to, because, if this is essentially an invention and a revolution all combined, well, then most of us will not be able to forecast the probabilities of the outcomes. The outcomes are going to be very different than we think with something so life-changing as this. Much like the internet, we had no idea where that was going to go.
Yeah, and so the one thing I would say that on securitizing actual normal physical assets is it might not change your or my life because we, have accounts in the United States and, trade those kind of things. But if you're one of the 6 billion people that's not involved in that, securitizing would be great. Like if you think back to the .com boom, if you wanted to buy a share of pets.com, you actually had to be an American citizen. Even like a wealthy German would have a hard time figuring out how to get a hold of some pets.com stock. Here, anybody with a smartphone can buy a tokenized security. So it will massively open up the access across borders for securitized assets, even IBM shares. Somebody in Indonesia with a smartphone could be able to buy a tokenized version of that.
Looping back to the macro scene where we are right now, people are confused why Bitcoin's not done so well, because I think they're thinking of it as a hedge to traditional markets. And I see it slightly differently. I see it as a call option on the future, on a future system. But how do you perceive it, and what do you think about the price action of Bitcoin and how this might evolve over this, call it next 24 months?
Yeah, it's a great question. Obviously, that's what we spend our time trying to figure out. The one thing I would say is I don't think I would have called it a hedge to the global macro. What I would have said is it's uncorrelated with global macro. So that is, I think, its strongest advantage is over long periods of time, it has very little correlation to everything else, to gold, oil, S&P 500. In the down spikes, there have been 5 down spikes since Bitcoin really became tradable. And in each of those, it's been an average of 8 weeks correlated with a 0.5 positive correlation to the S&P. And so when the markets gap straight down, Bitcoin does gap straight down with it. But over a period of weeks, that correlation starts to break down and it starts to trade on its own, based on its own fundamentals. And so when this crisis started, we actually reduced risk in our hedge funds. But we've already covered that back and are now fully long in our discretionary funds. Because as the dust settles, the correlations are going to break down again like they have historically, and it'll be able to trade on its own. And then when people see, Bitcoin and other blockchains are actually quite useful when a bunch of these other systems are starting to, get hampered by all the restrictions in the physical world, people will start realizing the fundamentals are not only unaffected by this crisis, they're actually, quite positive for blockchain itself. And so our forecast is Bitcoin's probably going to do, very well, but it's over the next 12 months, not the next 12 hours. And what we said in our investor letter a couple weeks ago is we think it's going to take 2 or 3 months for institutional investors to basically just triage the damage to their existing portfolio assets, just try to figure what the heck just happened. And then it's going to take 3 to 6 months to really look at new opportunities. like distressed debt, right? There was 10 years of no distress at all, and now there's going to be all kinds of amazing opportunities. There's going to be things like gold and cryptocurrencies, and so I think it is going to take 6 to 9 months for the markets really to get going. But I think everything, we've taken a super sober look at this, and there's some really big economic impacts. But the only conclusion we can come to for cryptocurrency is that in the, say, 6 to 9 month time frame, it is going to be very positive.
Yeah, I mean, one of the things that correlation that picks up between the S&P is simply liquidity. So, everything has a correlation of one in a liquidity event, and that's okay. But as you say, it then decouples very quickly. Then it has zero correlation, which is extraordinarily powerful as an asset. That has, it's not a huge asset. It's still whatever, 200 billion or just under. But it's very powerful to have an uncorrelated asset in this world. And everybody I speak to is definitely becoming interested. The family offices. I don't know a family office really that doesn't have a bit of it now.
Yeah, and so we've taken that thought process one step lower in our analysis, and within blockchain, we have a very similar phenomenon going on. Is that in the immediate down spike, everything becomes highly correlated, and Bitcoin typically outperforms, and so it has outperformed everything else in these stressed markets. So one of our first moves was to increase, basically double our Bitcoin exposure at the expense of the smaller non-Bitcoin assets. And then we also increased our systematic trading, which does well in very stressed markets. And so another view we hold in crypto is that Bitcoin is going to outperform, again, for a period of, say, 3, 4, 5 weeks, that kind of order of magnitude, not months or years. And then, over time, we'll reduce that and get back to our normal allocation. And the other thing to think about is this is actually the best time to invest after a crisis. And if you look at the returns for venture, for the decade coming up to the last crisis, so 1999 to 2008, the average return of venture funds was 6.28%. And these are numbers from Cambridge Associates, one of the most respected advisors out there. And then in the years 2009 to 2015, the returns tripled to 18.21. And that is our strong view, is that over the next 2 or 3 years, there's going to be some great opportunities to buy things at much cheaper valuations than we were seeing, a year or two ago when everything was at record highs. The whole world was perfect.
Yeah, that's total sense. And again, this is still early phase. So the ability to be able to pick up, cheaper investments in the space, if you're right about the macro view about where this is going, and, obviously I agree with it, we don't get many of these opportunities in our lifetimes, is my view. I've not seen risk rewards like this ever.
Yeah, that's why I'm all in, is that, like you say, this is a call option on the future payment rail of the world. And yeah, could go to zero, but could go up 10x, right? And you just don't see those trades but once in a generation, right?
And what do you think is going to happen to all these central bank balance sheets at the end of this? Because if this goes on a bit, they're going to have to do extraordinary amounts. And that obviously should help Bitcoin in the end. What's your view on that whole situation?
I lived in Japan. I was trading interest rates in Nikkei back in the early 90s, and they had overnight rates at 6%. And then they had what they called the Japanese recession, which was sub 3% growth. And then, it was a real one. And they invented zero interest rate policy, ZIRP. They called it the lost decade. That was 25 years ago, right? Like, rates, I think, are going to be zero for the rest of our careers, right? So with no more monetary policy as a lever, then you have to start extending what kind of assets you'll put on your balance sheet and how much, money stock to create. And we've seen the first fiscal stimulus package the U.S. Congress passed was $8 billion. That was about 3 weeks ago. Now we're at $2 trillion. And there's a great line attributed to Senator Everett Dirksen: $1 billion here, $1 billion there. Pretty soon you're starting to talk about real money. $1 trillion here, $1 trillion there. it just has to have an impact. And we're already seeing it. The intended impact's already helping the S&P be a lot higher than it would absent that stimulus package. Real estate doesn't have any real-time pricing, so it's hard to see, where that is. But, it's obviously higher than it would be had the $2 trillion not been allocated. And so I think you're going to see it in all kinds of other assets, cryptocurrency just being one of them.
Yeah, I mean, gold is the other one that people focus on as well, that, it's traditionally done well in these kind of markets when the value of money broadly falls because there's excessive amounts of it.
Yeah, and crypto is up a lot from its low on the 12th or 13th. It's already up, 40% or whatever. So you are seeing the impact start, but I think over the next 12 months you're going to see it, more fully get priced in.
Yeah, I mean, I'm personally, accumulating as much crypto, Bitcoin as I can right now, just because I too believe that within this, the hard money elements of Bitcoin, even discounting for the volatility, but looking at the risk reward, makes it an extraordinary opportunity that I've literally never seen before. And as you know, I've been involved in this space on and off since about 2012, and I just don't see any other outcome. I've never, even for gold as well. I think, look, gold can go up 3 to 5x. Bitcoin can go up 50 to 100x over the next 5 years. And that's, you don't see a whole asset class go up 100x. But you've seen it because you've been involved from the beginning, I guess. And also, how do you deal with the volatility? When you first got into this, you're not used to taking 90% drawdowns, but now you are. Talk to me a bit about that.
Oh yeah, no, it's hard. The market's super crazy. It goes up 1,000% and down 90%. It's already done 2 huge round trips since 2013 when we launched our fund, and a couple big ones in the year or two prior to that when I was studying it. What I try and tell our investors, and I try and tell myself, is even though it's basically venture with a real-time price feed, right? You're investing in a very early stage project, but they're tokens that trade, on little apps, every 2 seconds. So what I like to tell people is, although our Bitcoin fund offers daily liquidity, you should invest with a 5 to 10 year horizon and try not to look at it. And it is true that for anyone that's ever bought a Bitcoin and held it for 4 years, they've all made money. So, if you can do that, that's great. Unfortunately, human nature is very pro-cyclical. And I'm like many others, is when it's going up, it feels great and you feel so smart and, you feel like you don't have enough. And then when it's down 80%, you're super bummed and you're trying to, rationalize why you ever did this stupid idea anyway. So my only suggestion to people is try and think about it in a 5 to 10 year time period, and only put in as much as you can afford to lose, because there is a chance it all goes to zero, but there is a chance it goes up 10 or 20x. So try and stay focused on the super long term. And then we've seen in our own inflows massive pro-cyclicality. A huge fraction of our inflows come in at the highs, and very, very little comes in like right now when the market's way down. If you're an investor and you have the emotional and financial resources to invest, you want to invest at the lows and then, potentially scale out at the highs rather than, having the FOMO devil whispering when it's at 20,000, and getting in.
And you must have a kind of a wry smile on your face when you see one by one of our kind of old friends, the old macro guys, all coming across to you, whether it's John Burbank, whether it's even Dan Tapiero, whether it's, Alan Howard, Jim Pallotta, you name it. One after the other is basically crossing the Rubicon and going into this new world. You were the leader in that by a long way, so I'll give you credit for all of that. But it must make you laugh a bit.
Oh, it's great. No, it's great. It's all the old same friends of mine. Like, Mike Novogratz and I have been palling around for 35 years, and we're still doing it. It's hysterical. But I think it's because our job has always been look for big global disruptions. And man, this is disrupting global payments, remittance, gold, and it's disrupting money. And money's a $100 trillion market. Now it's $102 trillion. So it's not surprising that it's a bunch of, global macro investors that are the ones that really, really are embracing this.
Disrupting money. That's a great, I've not really thought of it that way, but it is disrupting money and the whole system of it.
Yeah, and there's a lot of people that even get religious about money, right? Because money is one of the only other faith-based systems on earth. There's nothing intrinsic behind the U.S. dollar. It's just a piece of paper. And people get super fired up, the dollar's great and we don't need another currency and all that. They forget there's 200 currencies on earth already, right? Like, why not have 201, right? Like, Bitcoin's just one more currency and there's already 200. And yeah, the US dollar's, one of the least bad paper currencies out there. But 6 billion people live in countries with terrible currencies, right? They, Bitcoin or ETH or Ripple or whatever, if they switch their entire economy to Bitcoin, it'd be way better. So that's why people should just keep it all in perspective. There's already 200 currencies. This is just like 201 through 210,
I just want to ask you one question because I don't really understand it. What is the value of stable coins apart from transacting across platforms? Why the focus on these stable coins right now? Because they're basically US dollars, but in digital format.
Yeah, so there are a couple advantages, right? All tokens, including stable coins, have these two principal advantages. They're borderless. So, Venmo is great, but I can't Venmo somebody from here to Indonesia, but I can send Bitcoin to somebody no matter what country they're in. So that's awesome. And they're essentially real time or instantaneous. And even the United States, which is one of the most sophisticated countries on earth, it takes 3 hours to send a Fed wire, right? So if the most sophisticated bank on earth wants to send money across Wall Street to another very sophisticated bank, it takes 3 hours. Whereas with a phone, you can scan Bitcoin in 1 second and it'll be there. So those are the two principal advantages. That will help even a dollar-backed stablecoin or any kind of, national currency-backed stablecoin just much faster, much quicker, and it's borderless. If you had one that was in kind of global use for commerce, it'd just be a lot easier, kind of like a global Venmo. You'd be able to send
I guess
$20.
That's what Libra is, right? If they get it off the ground.
Yeah, that's the goal, is essentially, and that's what the Chinese version of this is to try and make a digitally native currency that is, easy to transact, instantaneous, essentially free. It costs $35 to do an international wire. Like, think about that, right? Like, if I wanted to send money to you, it would cost $35. And back in the old days before the ban on international travel, it'd be quicker for me to go to the airport with a brick of cash and fly to the Caymans than it would be to wire it to you, because it'd take a couple of days. So, even stablecoins have huge advantages over our existing system.
I hadn't thought of it that way, but yeah, it's ridiculous. It's ridiculous that physically you can move the cash faster than the system can actually process it.
Yeah, it really is. And the first time Roger Ver actually showed me how to use Bitcoin, and he scanned it on my phone, and it popped up literally 1 second later. I was like, oh, wow, this is going to be big. It's way better than flying to the Cayman with a suitcase of cash.
Yeah.
Although I would, should you extend an invitation, I'd be much more than pleased to come join you down there.
You can bring a suitcase of cash as well. It's fine. Look, Dan, thank you very much for your time. I think it was really interesting to hear your perspective. What I'm going to do now, if you've just got a few minutes, I'm going to ask you some fixed questions that we ask a few people, and they're just kind of standard questions that people get to know you with. If there's one person, living or dead, who would you want to interview more than anybody? And if so, who and why? I'm
actually taking an online course on Beethoven right now. And it's through Stanford. It's kind of like, adult ed type class. And it was supposed to be physical. And when this whole thing started and everyone's starting to get in shelter in place, the professor was way ahead of everybody and sending out a note saying, hey, these are super trying times, but if the composer could suffer the most devastating loss any musician could ever have in deafness and still create his best works, we can at least do, a Zoom class. So I'm studying Beethoven. He's super fascinating. So I'd love to interview him if I could. What is the book or books that have changed how you view the world, and how so? And also, what are you reading right now? I decided with this hopefully rare opportunity to have months of kind of a different lifestyle. I'm rereading War and Peace, which is about a scourge that swept over the world called Napoleon. And it seemed apropos to our war that we're at with this little virus that we're battling.
And are you struggling through it? Are you finding it relatively easy read? Because it's notoriously difficult read being so long.
Yeah, so I have learned from past attempts, and I have a printout of all the principal characters and all their patronymics and nicknames and everything. And I refer to that like every 10 seconds. And it's still super confusing to remember who everybody is. But I'm endeavoring to just kind of get some momentum and make sure I just plow through it.
As an individual and a leader in your field, how do you stay engaged and relevant in a world that's moving so quickly?
Wow. So these days, actually, there is a potential for like over stimulus, right? Like there's so much information and it's all so important, and it's a lot of it's hugely distressing. And so the one thing I am actually trying to do is essentially limit my intake of kind of just general news, like, normal news, to only a couple periods per day. And one of the things I did to kind of get some space to actually think without all this white noise just like reverberating is I did just block out like 3 days to write our investor letter a week or two ago, where I essentially tried to not read or talk to or get involved with anybody else and just actually be able to think. And that would be my only advice for everyone these days is there's so much stimulation. A lot of it's really distressing. Obviously, we're all worried about our own physical and mental health, our kids, our community, is to try and block out time, big chunks of time, 4 hours, 6 hours or whatever, where you can just think and not like basically stop the input of stimulus and, potentially just create a space for your brain to stop, throbbing from all this input of data and to see if you can process what you already have in your head.
Yeah, I found that really hard for the first week of shelter in place because my wife's not here, so I'm on my own at the moment. So she comes this weekend because I think she had COVID and she's in Grand Cayman. So I'm here. And so you just spend everything. I'm my Bloomberg, Twitter, email, news sites. And after a while, I'm like, stop. You have to carve up your day differently and change because it's just overwhelming.
Yeah, the other thing I'm trying to do is put some structure, back into life because, in the normal world, our lives are probably overly structured. But in this new world where like everything that you had planned's been canceled, you can easily kind of have it drift. So I'm trying to, have a very structured day where, I kind of do the same things at the same times, to try and get that rhythm back, I think, humans and all animals have their own circadian rhythms that need to kind of stay in tune.
Some of our guests can tie their success to one key breakthrough. Did you experience a tipping point in your career?
I'd say my experience in Tiger Management was just a huge transformative thing for me because I came in having run a hedge fund before Tiger, which I think was unique at the time. And, I'd learned a few things kind of on my own, experimenting with, successes and failures. But getting to work with Julian Robertson and 40 other really smart, nice people, was such a boost to my career. And, I've learned a ton from the lessons, that all these peers of mine gave me.
Did Julian ever get involved in Bitcoin?
He has. He's a very forward-thinking man. And, many years ago, 4 or 5 years ago, he invested in our funds. And then coincidentally, my son actually goes to the school Julian went to in the 50s. And so I've seen him there, and he's up on stuff.
Good man. Can you identify a failure that had the most significant impact on your career, and what did you do to overcome it?
Oh, actually, it's a good story. It's quite germane to our current environment. So I started out, as I mentioned, I was an asset-backed securities trader at Goldman in the 80s, and the Wall Street stock market crash happened, and like Salomon cut their entire muni department, and everyone was cutting. And so they said they had to cut the department by like, 20% or something. And they were thinking about laying me off. And I was like, what? That's outrageous. Because I'd just been sitting there, but I really hadn't been learning. I was just kind of sitting around, playing liar's poker with the other guys on the desk and Steve Mnuchin and all that. And I really wasn't stressed in my training. I wasn't stretching myself. I wasn't really doing anything. So I quickly grabbed the phone and I was looking for that headhunter's number for the job that had offered me like 6 times or whatever I was making. And, I went and switched. I went to Bankers Trust, and it was awesome because having kind of gotten thrown out of a really comfy situation, and it just kind of kicked me into gear. And I realized I should just like put myself out there, right? And just go for it. And since then, I've been just, kind of like putting my whole heart and soul into everything I'm doing. And especially, with blockchain, it's the same. I think we're going to make a lot of money in this business, but like I'm passionate. We're actually changing the world, right? 20 years from now, we're going to look back and blockchain is going to have improved a ton of people's lives. And it was basically, getting kicked out of my comfy, gig forced me to kind of actually get engaged and get going. And that'd be my advice for, graduates that are potentially going to have their jobs pulled from them now is dislocation might be the best thing that ever happened to you. And just embrace it and be open to it. And my son showed me this great clip from The Rock about him getting cut from the NFL. And, that was the best thing that ever happened to him. And, that would be the spirit I would be looking at this.
Absolutely. Okay, last 2 questions. Who's a person you admire and why?
Oh, there's a lot of people. But the one that's relevant to this conversation is, and I know it sounds trite, but it's actually a super earnest thought, Satoshi Nakamoto. And the reason I say it is, I'm just not aware of anyone else that's ever contributed something of such incredible value to the world. Blockchain's 200 billion, as you say, and not taking anything for themselves. It's amazing that the open source code was just contributed to the world. It wasn't patented. And even the 1 million Bitcoins that Satoshi owns, he or she or whatever, hasn't sold or done anything with them in many, many years. So, I think that's inspirational. Again, if it's true that blockchain actually improves people's lives, then I think it's going to have a huge impact on people. It's just really cool that Satoshi essentially gifted that to humanity. And I think it's great.
Final question. What view do you hold that's most controversial in your professional life?
I would say my views right now are not like 8 Sigma outside consensus, but the views that I expressed earlier that this is actually a great time to invest in venture, might sound self-serving or it might sound, like kind of knee-jerk reaction, but I hold it very sincerely. And that's one I think most people probably wouldn't vote with their checkbooks to agree with me on. So, that would be the one I would say is the most controversial relative to the professional community.
Perfect. Dan, listen, thank you ever so much. It was really good. I thoroughly enjoyable and lots for people to get their teeth into as well. I think it was really great to tie up your macro experience and your understanding now. Kind of you've let back into macro world just to try and make sense of what this all means, because you kind of have the intuition that this is going to mean a lot for your current life in terms of, the assets that you look at. And I think that's fascinating.
Well, Raoul, thanks so much. It's been a pleasure being with you in these trying times.
Yeah, absolutely. And take care of yourself and look after your family as well.
If you're ready to go beyond the interview, make sure you visit realvision.com, where you can try Real Vision Plus for 30 days for just $1. We'll see you next time right here on Real Vision.